Yesterday on Closing Bell, you told me you're buying Eaton and Rockwell. You thought they were punished unfairly.
Yep.
Ridiculous that those stocks traded down on what you thought were pretty good earnings. Take me through the Chipotle one, since you told our viewers yesterday in the afternoon why Eaton and Rockwell made the list.
Yeah, and it's not every stock that I'm buying on the dips. It's where I think the fundamentals, either short-term or long-term, are misrepresented. Chipotle is going to take a while. I think it's going to be second half of the year story, maybe even into 2026. But after I saw the challenges in same-store sales at Shake Shack, Wingstop, Starbucks, and others, this is not a Chipotle same-store sales problem only. It's a problem, but I think it's going to get resolved because they have growth drivers. They've got new products, they've got technology, they have digital. Most importantly, they talked about June ending on a strong note, which is a good thing, with better traffic trends. They have the products that people want. And actually, they have a decent pricing strategy as well. And they still have high single-digit percentage unit growth. So not cheap at 30 times versus 40 times historical, though. Growing earnings at about 20%, and it's down 29% on the year. It's been a horrible pick on my part. I'll admit that. But it was like, do I sell it or do I buy it? And I had more conviction in buying it for the longer term, with all the reasons I just mentioned to you. Because I think you're going to see a return to growth, a return to traffic growth, same-store sales. Margins are best in breed, and they have the products that people want. And the valuation has come down to a reasonable level given what they're going to grow going forward.
You ever wonder whether the best days are behind this name?
I don't think so at all.
That there are just other offerings that people are more in tune with now that they like better?
They're in the top 10 QSR. They only have 3% of the market share in a $400 billion industry. So no, I think there's room for a lot to grow. And again, this is not every single stock that falls that I want to buy. This one's probably the hardest, actually, to be honest with you. And United Healthcare is also
that's why I'm asking
the
those
other
questions.
one's hard. Right, that's right.
Right.
Sometimes buying hard makes a lot of sense because everybody is on one side of the boat, and I'm trying to be kind of like in the middle of the boat. I don't necessarily need to be by myself, but I would say the two names, United Healthcare and Chipotle, are the two hardest to buy, and the two things I believe to buy for the longer term. I think it's the right thing to do. In terms of the Rockwell and Eaton, we talked about it yesterday, but industrial electrification is on fire. And I looked at those numbers. I could not believe the reactions. Now, they ran a lot. We talked about it. But when you have Rockwell increasing core earnings by 51 cents, that is crazy. The stock was down 9%. Margins expanded over 200 basis points. Eaton, we talked about data center. 80% is electricals around the world, and that actually saw 55% order growth. That's visibility. So to me, I'm picking my spots, Scott, but I have a little bit of cash. We did sell something we can talk about if you like, but did sell some.
We'll get there in a minute.
No, we can talk about that, but I don't have...
We're going to get to another thing you bought more of in a minute, because it does play into this story. I want to hear from Jenny, though.
I was going to say, in response to, like, has it played out on Uber? If my teenage kids who are 16 and 18 are anything, representative, no, it hasn't. It's still their favorite. With everything else out there, with Kava, with Sweetgreen, Chipotle is still #1 for that crowd. So, anyway, that's all I had to say on it.
That's all you had to add?
That's all. Yeah,
all right, great. Josh, did you have something you wanted to add?
Do you think the sell-off in Chipotle is justified, but now it's like a lower risk entry because of how much market cap has already been lost? Or do you think like the fundamentals are good and the sell-off is not justified?
No, I think that they've had a speed bump, but I think the industry has had a speed bump. April and May was really, really challenging for the consumer and sentiment. Remember how negative and gloom and doom everyone was? So, of course, you're not going to go out and buy 5 different burritos each day, right? I mean,
speak for yourself.
I mean,
but when you said it was in Steph's portfolio, I was going to make a joke, and it's in Josh in my belly.
I don't do. Your mic's falling off. I don't personally do Chipotle, but to your point, my kids and all of their friends, that's their go-to. It's like second nature.
It's incredible.
So the RSI is 24. So tell me about that,
right? That's just washed out. It's a falling knife. It's the United Health of Mexican food.
Of course, and I can't have too many of those in a portfolio, but I'll have 2 or 3.
What turns it? What turns it? What are they? Is there anything they can do, or just the consumer has to come back?
Before you answer the question, and I don't know the answer to this question, can we show a performance Chipotle year to date maybe versus a Kava, for example, because I feel like there might be something to that conversation, but you can answer that question.
The stock is down 29%, Scott. It is where the kids are going. They do have the traffic. They have very easy comparisons, by the way, in the second half of the year, so that'll help them as well. But they do have product initiatives to drive more growth. They still have, I said it before, high single-digit percentage unit growth. Name me one other company that has that kind of growth, in addition to best-in-breed restaurant operating margins. And you add it all up, it's a falling knife. It doesn't look good. That's okay.
Cava doesn't look good either.
The whole industry has struggled, and I'm trying to find the best in class in the industry. I'm not saying that Cava isn't, not saying that Shake Shack isn't, but I think that Chipotle is a value here, especially given that it's down so much, it's washed out, and no one's even talking about it, which I kind of like too. I'm going to stay patient with it.
But Steph, when you say it's a value here, like that's the one part where you
relative value, relative value,
and I think what
I have 35 times forward. What do you have?
That's the problem.
At 30 times forward, it's 22 times EBITDA. It historically is traded at 29, 30 times EBITDA.
I know, but I think that historically is where we start to get into trouble here. Well, and if you think about the portfolios that we manage at Gilman Hill, there are a lot of these, like they have a decent valuation, decent absolute, decent relative, but in this market, all the investor dollars are going to AI. And it's hard to fight.
I have plenty of that.
I know, but I think then when you see that 35 times, it just becomes insurmountable.
Well,
it's grown 20%.
Yeah,
but
EBITDA 25%. Like the argument I was having a couple weeks ago with Kevin Simpson. What's going on? Sorry. It's almost like the argument I was having with Kevin Simpson on Palantir.
And you know what happens.
I get kicked off the show.
You're out.
Headset.
Oh my God.
Yeah, headset.
Okay, so I'll spend the rest of the show like this.
Okay,
but when we were talking about Palantir,
whatever it takes.
And Kevin was saying Palantir's earnings were up 39%. I'm like, yeah, 39%, but it's 150 times earnings.
Yeah, but this is not 150 times earnings.
No, it's 37, but it's 37 for a slower grower.
It's 30 times for forward estimates.
I just think it's still a rich
historically,
valuation.
it's traded at 40 times.
Everything else I agree on.
I'm not saying it's absolutely cheap. I'm saying it's relatively cheap.
Are you looking at it versus like a Starbucks? Because I think
I have better growth.
Like Chipotle has faster growth, but Starbucks similarly has the potential for a turnaround here, and the valuation is more reasonable.
I don't know if
I'm not in either stock. I'm just curious.
Yeah, no, I mean the valuation is like 25 times, and you're not getting 20% earnings growth, and you still have a turn. Now, I'm intrigued by that because you know that I like to do that, especially
the market's
with
intrigued by your argument, obviously.
Well,
Chipotle's up.
I don't know.
She's a hitter.
What odds of the day for CMG?
I don't know. You just got a year from now, I think it'll be
Here's
higher.
a potential catalyst. Pershing Square comes back. Taco Bell rides again. I don't know. I mean, this stock, we've counted it out before, and it's one of the best investments I've ever seen anyone make. When Pershing Square came in during the food safety crisis, I think he had a 5X in the name. Like, I don't know if you have the same potential from today's valuation, but we've counted this company out before historically, and it's had some huge comebacks. I wouldn't say it's out of the question. So
this does raise the issue, the overall issue of stocks that, like an Eaton, for example, as you said, or maybe a Rockwell or others that have had pretty good earnings.
Yeah.
I'm not saying Chipotle did.
No, that's why that one's the hardest.
Right.
Yeah.
But the idea of good earnings, bad price action, that's what led you to say this is absurd with the Eatons of the world. Does Uber fall in that category? Well, because you bought more of that, right?
Yeah. And
their target goes today to 120 at Goldman, target to 117, UBS. There's obviously a lot of love on this program for that name, but is that one of those stocks too? Good earnings, bad price action, pounce on a dip?
It was down 5% in the pre-market, and I thought that was absurd because I'm looking through the report, and all-time high in frequencies, profitability, customer count, mobility, delivery. They've got a whole new product set coming. They have a $20 billion buyback, and the thing was down 5% pre-market. And then it was down about 3% all day, and so I just added to it as well. It's a verb, and it's where all
they bought it. They bought
do.
it. They spent the whole day buying it back.
I know.
The pre-market sell is like algorithms.
I know, but
they don't even care.
It didn't like I thought it was going to be up 5% after I saw the results, and then when it was still down 2 to 3, mobility was a little.
Two reasons why it wasn't. I thought the numbers were solid. I think the street really wanted to hear about an expansion of the Waymo partnership into a third city, and Dara didn't have it. He may have it tomorrow. He didn't have it for the earnings call. I think the street is like, okay, Austin's great. Atlanta seems to be going really well, although it's early. who's next?
And
they didn't have it.
And I agree with you, which is why I bought it, because I couldn't believe it was down on such a solid report. And we know all that stuff is coming, Josh.